All right, we'll do the LIFO periodic. The concept of going backwards, because it's LIFO, last in, first out, the last purchase will sell first. That's what it means. So we'll go backwards, but we don't have to go step by step like the perpetual. We just have to start from the last day in the month, which is August 31st. So consider that you have sold out all your units the last day of the month, August 31st. So combine all your sales for the month in one. Consider it as if it is one deal, okay? So how many units did we sell? Again, it was 4 and 10, so that makes it 14. So 14 units sold out. Now, what is my cost per unit? Now, let's look at the last purchase we had before the August 31st. Remember, this is LIFO. We have to start selling from the last purchase we had. Look at the 12 units. Although you might have sold some of your units before you did the purchase for those 12 units, but with the periodic method, we're going to ignore that, and then we will still be taking our first units that we sold out, we'll still be taking them out of the 12. And the reason why we do that, because we're going to calculate our cost of goods sold end of the month. That means that day, we know already that we purchased 12 units for $380 each, because that happened before the August 31st. Okay, so 14 units sold out. The last purchase was 12, so I don't have 14 there, I just have 12. So I will take the entire 12 units and then each one of them multiplied by the cost per unit, which is 380. And then I still need 2 more units, so I will go one step back. Before those 12 units, there was another purchase on August 5th. So out of those 4 units that we purchased, I only need 2, because that will make my total units sold out 14 based on this information that I have here. So those 2 units that I took from August 1st purchase, it costs us $360 per piece, okay? And if we make a quick math, you will see that my total cost of goods sold was $5,280. Okay, so on August 31st, the 14 units that I sold out is $5,280. Okay, and then the ending inventory, again, you can do that in 2 different ways. Either you find out how many units you have left over, multiply them by the cost per unit for every group of units that you have in your inventory layers separate. You calculate those separate, or subtract your cost of goods sold from cost of goods available for sale. My cost of goods available for sale is $6,700. That's what we calculated in the previous video. So, and let me just remind you how we got the cost of goods available for sale. We did, let's do that after we do the first way in our calculation before we do the second one. Okay, so we sold 14 and our total units was 16. So my ending inventory, we had 18 units because we had 2 units on hand plus 4 that we purchased plus 12. That makes it 18 units in total. We sold 14, so my ending inventory is 4. Now, what's the unit cost? Remember that those 12 units were sold out, so there's no more 380 to be used for ending inventory. And then one step back, those 4 units, we sold 2 out of 4, so I still have 2 of those 4 available. So I will say 2 of them multiplied by the cost per unit, which is 360. And then the other two that I still have available, it's the very first 2 units that I had beginning of the month. Okay, those 2 units we did not sell them yet because we sold the earlier ones first. Okay, so I still have those 2 units that I had from August 1st, and then the cost per unit is $350. Okay, if you do your math, that will give you a total cost of $1,420. So at the end of the month, $1,420. Remember that your total cost of goods available for sale is always going to be the same. Either you do FIFO or LIFO or weighted average or perpetual or periodic. It doesn't matter. Okay. If you add up those 2 totals, you will get 6,700, which is also the 2 units beginning of the month multiplied by 350 plus the 4 units we purchased August 5th multiplied by the cost per unit, which is 360, plus the 12 units we purchased in August 26 multiplied by 380, and I guess that's everything, and that will give us a total of 6,700. That's your cost of goods available for sale. So what's my alternative way to calculate my ending inventory? Well, take those 6,700 cost of goods available for sale and subtract your cost of goods sold, 5,280. That will give us $1,420 as well. That's all for FIFO, LIFO, weighted average. We use the perpetual and periodic. So in the next video, we'll jump to the next chapter.